Alright, Pack, welcome back to another video here on the Dividend Doggo Show on YouTube, and I'm bringing you in for the weekly portfolio review. It's been a couple weeks, I've been super busy, and I'm hoping that I can get you back in and hooked into this dividend investing thing relatively quickly here. This is my plan. I'm going to try to make $80,000 a year in dividend income off of this portfolio to bridge the gap for early retirement, somewhere around the age 50 to 52. So I've got quite a bit of time till that occurs, about a decade, a little more than that. So we're going to be going into the portfolio as it stands today. This is a taxable brokerage account on M1 Finance. This currently produces a little over $21,000 of dividend income per year. So we're a little over 26% of the way through the goal for the portfolio. So we have the portfolio broken up into several sectors. It's been a little while and I've gotten a lot of new subscribers, so I'm going to very briefly go through. This is the all-time view so that you can see where kind of the big winners have been, where some of the I don't want to say losers, because these are still making money and they've had a little bit of a dip. It's been a very, very rough market. If you look at, how the portfolio has gone since 2019 when it was started. I started funding the portfolio rapidly. You can see where as the market started crashing in 2020, I had been putting money into the portfolio, and then I started rapidly throwing as much money as I could into the market in early April, and then I just continued to throw money in as fast as I could all of 2020 basically to build up the portfolio. Then into 2021, I continued to try to find stocks that I was interested in buying and continue to keep building it up. Now, I did sell a couple of the ones that had gotten tremendously overvalued and have put some of that money into a real estate project that hopefully I might be able to talk about in the future. As I have not actually broken ground on that project yet, I kind of want to leave it to its thing until it's actually closer to completed. But all in all, the portfolio I've been re-adding money into, as well as dividends. And I've been pretty consistent with trying to buy both with the dividends that the portfolio makes and with adding contributions from our income to the portfolio. And that income comes from real estate holdings across multiple states, as I am a full-time real estate property manager and project manager. So that is what I do to bring in money. My wife also works full-time, and we contribute to her 401k and try to max that out, which usually at the beginning of the year I slow down on my deposits a little bit, as we usually like to try to max out her 401k contributions. So we do that at the beginning of the year. We're getting close to capping that out right now. So I will be showing the where that money is sitting right now. We actively invest that into the F.I.R.E 500, which is an S&P 500 equivalent fund via a 401k option. So it is a tax sheltered retirement account. I've talked about it a little bit in my December videos when I did the total portfolio review. So you can go back and watch those videos if you're interested in seeing what the breakup of the overall net worth in stock and cash assets was in December of 2022. So let's break down and look at, we have the Coma Money Pie. This is where everything, just about all of the money would go and be funneled into. You can see it's about 25% funded. And it would fund until it got up to about that 94% fund. This compromises two stocks primarily. It may get a third stock here in the near future, which will be an index fund. SCHD is where I want the bulk of that money going. I will reorganize this a little bit in the future when I add a third fund to this, but it is SCHD and Berkshire Hathaway. I absolutely love these. I know Berkshire Hathaway is not a dividend company. However, it is a compounder, which I will aggressively use this to either buy a real estate property in the future, or I'm just going to continue to let it compound until we're actually retired and then figure out what I want to do with it from there. SCHD pays out a very healthy dividend right now, and I reinvest that money every quarter when that comes in. I try to reinvest it right back in to buy additional shares of SCHD. The consumer money pie is broken up amongst all these stocks. And as you can see, If it was to reinvest money, I would want most of that money going into Costco and Home Depot, a little bit into Coca-Cola. It's overweight right now. And then Lowe's and Target as well. PepsiCo has done pretty great things for the portfolio when you look at it on how long I've had it. So I might actually do some readjusting of these numbers in here. But I do currently like where the Altria position is. I don't really plan on investing much more into this position. And I roll its dividends usually into other stocks, sometimes back into itself, depending on what the price of the stock is. I look at that at the time that the dividends are rolling in and I reevaluate where I want to place things. So this is what this looks like right now. This is the all-time view. I'm going to break this down to the 1 month so you can see just how red or green the portfolio has looked over the past month or so, because I know a lot of portfolios have been in the red. You can see some of these positions are in the red still on the 1 month. If we look at like 1 week, you can see that things were bouncing back a little bit and going back up, which is absolutely phenomenal. So all in all, this portfolio has done very well, and I love these companies. I use a lot of these companies, and I love going into Costco and knowing that I own a chunk of the stock. It's one of those that I would like to add to in the future if it comes back down into kind of a reasonable range. As you can see, the finance category is now, it is technically in the red on capital gains. As you can see, the banks have had a absolutely terrible month. I'm sure that you have heard of the bank, Silicon Valley Bank, failing, and then absolutely getting trounced. This has caused regional banks to go into a buy territory. I have had Bank of Oziki for quite some time. None of the fundamentals have really changed with that bank. I'm going to be looking to add to this position. This is one of those that I have had for quite some time. I really like this stock, and I'm looking at it as, holy cow, this is coming back into the kind of the buy range for the stock. As you can see here, my share prices were about $32 on this stock. It's now down to 34. It's dropped 25, not quite 25%, because this is the money weighted average return. And if we were to go in and break that down, it's a pretty significant chunk of change that it's dropped in the past month. Sorry, that. And then that's pretty wild. I'm not really investing into the finance sector right now. I am, however, watching that one in particular. T. Rowe Price, it's funny that that's in the green right now. But all in all, banks have had a pretty crappy month. And in my opinion, it's kind of well deserved. These banks, some of them allow very predatory practices, and I don't really like that. The fact that when one bank fails, even if it's a cornerstone bank, the government just steps in and bails them out, and I kind of hate the way that that works, because it's negatively impacting on these smaller regional banks that then will have to pay higher fees to the FDIC. It just frustrates me a lot. Knowing a little bit about the banking sector, it's very irritating to me. However, it is where I have a good chunk of money sitting right now, and I'm going to continue to hold that. As you can see, it's down about $15,800 in the course of just a month. However, when I zoom back out to all time, you look at the dividends, and it's almost evened out. The market gains, I think the banks will come back and bounce back. I don't plan on selling any of my bank stocks right now. I plan on adding 2 positions if I really want to. I'm exceptionally glad that I did sell out of Ally Bank. Buying into that was just horrible timing for me. So last year I did take a little bit of a loss on that, but made up for it with gains in other stocks. I am definitely glad that I'm not still holding it, because I think it's down below about 50% of where I was buying it last year. The healthcare sector, this one I've done absolutely phenomenal on. This is mainly off the back of AbbVie and investing in it when it was in the $80 range. And I held it for quite some time before selling off the position. Just past the peak, I thought about selling it, and I debated it and debated it. And one of the things that I would say I'm really bad at as an investor, and I need to get better at, is knowing when to go ahead and say it's acceptable to take the gains out of this position and either sit on the money or just rotate it into something else. So I did just that. I rotated this money into a bucket for financing a real estate project. And that's been a great choice in my opinion because it has come down a little bit. Now, over the past month, it's actually come back up. But all in all, I am very, very happy with this sector and its performance in the portfolio. So let's go ahead and dive into utilities. This is Vistra and Duke. I did have others in the past, but I did sell some of them off. Vistra I had been buying into heavily in 2021. I had been buying a little bit in 2020, but I really went in 2021. As you can see, it was in February, just after the news about the Uri winter storm in Texas. I invested heavily into that company. I let it run up a fair bit, and then I went ahead and sold some off. It has been on a bit of a roller coaster and had some good news lately, and I absolutely do still like the stock. I'm not too happy about its current debt load, but I love the share buyback plans, and I will continue to hold it for a little bit of time here, at least the current position that I have with it. Now, the next one is monthly dividend stocks. This is just BST. This did have other stocks in the past, which was bringing down the actual total gains for this position. However, this is one that I just want to continue to hold on. I will be likely reinvesting a little bit more money of that stock as it's still underneath my share average share price. All right, and the last one that we have here is industrial and railroads. This is some stocks that I've been adding to very recently as of just the past few months. So I have added CIX, Complex International, back into the portfolio. I'm slowly adding to this position as it is a very low trade volume stock. If you're interested in this one, this is a primarily marine equipment and small equipment sales company and manufacturing. They do quite a bit of interesting things with the company management. They focus on a strong dividend, which is, I believe, right now just over 5%. They do a special dividend periodically, and they are working on a little bit of share buybacks right now. And overall, they have a great free cash flow, which is one of the reasons why I was really interested in the company. So I'm slowly reincorporating a little bit of that back into the portfolio. And with the banking stuff going on and with the housing market stuff going on, the Louisiana Pacific Corp has come down a little bit in price. I'm likely going to continue to add to a bunch of these companies that I add to this. I'm still looking at one more Canadian railroad stock that I want to add to the portfolio, as I've got a little bit of extra money coming in over the next couple months that is going to get allocated probably into this sector. I'm slowly buying a few shares of CIX every single day and just kind of building that position up over time. Ideally, I think my goal for that position is going to be about $5,000 to $10,000 in total value. And I want to kind of bring up UMP to about that range as well. So I'm going to be adding a little bit to these stocks over the next couple months as well. So that brings us back to the portfolio review. We go down to 1 month. You can see kind of where things have gone. Industrials is down a little bit. We've got several in the green, and utilities is up. VST had a really good earnings call. They talked about doing about $1 billion share buyback plan, which is a pretty huge chunk of the company. I want to say about 9%, something like that they were going to buy back the shares. So that's a very hefty investment in the company and overall. So over the past month, finance been hit pretty hard. Not too worried about it overall. I'm hoping to come back at you guys with another video here very soon. I appreciate every single one of you who has liked, commented, and subscribed. If you're interested further in the journey or you have questions about my personal journey here on YouTube, that's exactly what this channel is all about. So go ahead and drop a comment down below. I will try to respond to it and give you as best an answer as possible. Now, just a reminder, none of this stock information is investment advice. This is my personal journey, and I'm sharing that on YouTube so that it can give others an inspiration in, the dividend journey and compounding the dividend snowball effect so that you can see it over time, and you can go back and watch my videos from, 1 year, 2 years, 3 years in the future, and see kind of how the journey progressed and how it has gone for me. So again, thank you for watching. I hope that y'all have a fantastic weekend, and this is Dividend Doggo signing out.